Welcome back. You're listening to The Blockchain Show. It's my great honor today to welcome Seth Wunder, the CIO at Acorns. Seth, welcome to The Blockchain Show. How are you?
I'm good, Ethan. Thanks for having me.
Yeah, well, it's my pleasure. Been using Acorns for several years now, and I always wanted to talk about it on this podcast, but it didn't really quite make sense until recently. So definitely excited to have this conversation today. But if you wouldn't mind just maybe telling us a little bit about yourself, your background, and how you got involved at Acorns.
Yeah, I appreciate the opportunity to talk to you and talk to everybody else. I've spent, prior to joining Acorns, 20 plus years in the investment community. Traditionally started my career in the late 90s as an equity analyst, watching the tech bubble go up and go down, and working as one of several team members covering tech companies in the mutual fund space. I joined the hedge fund world about 2004, and had spent the 12 years prior to joining Acorns as a portfolio manager myself, researching tech companies, technology trends, secular investment ideas in the long-short world. Joined Acorns for a whole bunch of reasons. Super excited to be able to be a part of a tech company and a fintech company at that, helping everyday Americans learn how to save and invest for the long term. A lot of skills that I've built up along the way that I love sharing, both in the app and also in talking to our customers, and getting into new asset classes. As you kind of alluded to, we had the nice introduction of bringing in a Bitcoin based exposure product into our core stock and bond portfolios. And the opportunity for us to build long-term value for our customers is something that excited me to join. So here we are.
Yeah, it's excellent. You're right. It is a tech company, and it's very evident because I use it primarily on the app on the phone. It's just wonderful. It's very, very simple, yet elegant and powerful. All sorts of great features that if anybody listening hasn't had a chance to check out, like I've, investing for my kids' future. I've got retirement. I've got checking. There's so much on there. It's just such a cool product you guys are working on there. There's a lot of people listening who probably already use it, but for those particularly interested in cryptocurrencies and blockchain technology, last, I think around November or last fall, we started seeing Bitcoin ETFs in the news, and then a lot more interest. So kind of curious how it works with the Acorns app. Is it just something that people can allot a percentage of their recurring investments to go towards Bitcoin, or maybe if you wouldn't mind breaking that down for me?
Yeah, let me give you a couple of quick moments on this. So, for people who use our app, and as we have 4.5 million plus customers that do use our app in the US, which is great, and we're really helping those people have exposure and think about the long-term investment opportunities for stocks and bonds. And what we've done is we've enabled a fairly seamless process for people to really invest three ways. They can use roundups off of a spend card. They could set recurring investments on a daily, weekly, monthly basis. And certainly we enable one-time investments. People come to us for education, the simplicity, the brand safety, the way we put risk and analyzing risk for people front and center so that they feel comfortable with how they're thinking about their investments for the long term. And we've tried to take those experiences and that workflow and put our brand behind, also introducing new asset classes as it makes sense. You did reference the fact that there were Bitcoin ETFs that launched sort of middle end of last year. And we've enabled one of those into our app at the end of March for our customers. And it works similarly the same way you would have exposure to, let's say, the S&P 500 or to a 5-year duration of a bond portfolio, whether you're investing daily, weekly, monthly, or through roundups. those monies also go into having Bitcoin exposure. We looked at it from a portfolio construction. My team did a lot of the risk analysis on how volatile is Bitcoin relative to the other assets, how to think about the correlation amongst Bitcoin relative to the other assets, and what would be the optimal exposure level given those dynamics to make it the safe way and an Acorns branded way to invest in having Bitcoin exposure. And so it's seamless for people. They have an opportunity to make that choice themselves, to opt in if they wanted to include that in their portfolio. And then depending on what their risk suitability is, which they've already given us that information based off the questions they've answered, we've automatically allocated to their portfolio the right percentage for them. And that's, really the path that we took. It's the beginning of us moving into having some crypto opportunities for our customers, and I'm sure we'll get into it, but we'll continue to evaluate that on a go-forward basis as well.
I like the educational aspect, and certainly a lot of first-time investors. And, actually, that was myself included several years back. I wanted to do this episode for people listening who may just tune in just to they're kind of crypto curious, but they haven't really bought any crypto of their own, because this seems like a really good way to get involved. Yeah, I just encourage people just to check it out. I'm not obviously we're talking to you, Seth, but it's not sponsored in any ways. I've just used it for a long time and really enjoy it. And you mentioned the volatility of Bitcoin, which is something that is pretty central to a lot of traditional investors. A lot of older folks I speak to, they would kind of warn me against Bitcoin several years ago, but they've since kind of changed their opinion on it. But I always kind of view it's more of a long-term savings or investment strategy. I mean, there's definitely those listening who like to, try to get in daily and catch the waves. But if I've been following the chart for several years, and there's just tremendous growth. So I think if somebody goes into it with the mindset of long-term growth, there's potential for pretty solid return on investments with Bitcoin. Just kind of curious, with your background evaluating the risk with Bitcoin, with us seeing more Bitcoin ETFs, does that make it a little bit more of a safer choice for people with it being an ETF? Or if you would mind just explaining the difference between Bitcoin ETFs and the conventional ways that people buy crypto.
So there's a couple of nuanced differences that are helpful to our customers. There's two ways to have exposure to Bitcoin in general, which is through an ETF like the one we've enabled in our app and for our customers, and then there's owning the tokens on a native basis. If you were to go down the path of owning a token natively, you're going to expose yourself to having a digital wallet, which comes with the need for maybe a separate app. Certainly, understanding who's running the right security infrastructure behind that app, and you're beholden to the technical skills, capabilities, and know-how of those people running those wallets and making sure that your money is safe. Which is a little bit different in its format than traditional stocks and bonds as they're currently set up. The second thing is there's transaction fees. Investing in traditional Bitcoins, many platforms could charge you, let's call it 3% at the midpoint for the buy and the sell. So on $100 of a transaction, you're paying $3 in and $3 out, and those fees can certainly add up and become quite significant. Accessing Bitcoin exposure through an ETF, and particularly a well-run ETF, you can get virtually the exact same price exposure. So when it goes up or down, you're getting the same matching of returns both ways. But ETFs run over all the scaled infrastructure that stocks and bonds run off. So those costs have been normalized for you, and so the total fee is less than 1% altogether. So in or out on the $100 is less than $1. So it's more cost effective. And all of the let's call it the wallet-based infrastructure on the back end has been already obscured or taken care of for you. And so from a security perspective, you just run dramatically less risk than having to have a digital wallet infrastructure. So ease of use and transaction fees are the big two advantages, and something that for the vast majority of people who just want exposure to the asset in terms of the price going up or down, it's a way more effective way to do it. And just to bring back history, I mean, I started my career 20 years ago, but for people who aren't a student of history, you could go back multiple decades. Stock investing used to work this way too. Old school stock investing, if you ever listen to your grandparent or something like that, they used to send you the stock certificates, and people would have to put it in safety deposit boxes to say they had a share of IBM or Disney or the proverbial under their mattress type of thing. And if you lost those stock certificates, you lost your ownership of that stock. And the stock world got really smart, and they said, this is silly. Let's help people institutionally or securely own the certificates, and we don't have to mail them to people's houses. And then let's take it one step further, and let's put stocks into ETFs and make it transaction fees even less and even easier that way. And in the crypto space, we're just starting that advantage now. So they're relatively newer products, but they're old in their construct and adoption, and the know-how is there. And I'd imagine over the long term, we'll see the vast majority of investing in crypto assets for the everyday person to start to shift towards more products of this nature. So we're just early in that adoption cycle.
Yeah, I really, really appreciate that. I heard a quote from the CEO there at Acorns. He said, "There's a gambling epidemic in America. We're giving our customers crypto exposure and education for long-term investing." It definitely kind of rings true on this show. It's kind of been a recurring theme that kind of drives me nuts. Just a lot of folks we'll talk to they're so hyper focused on the gambling aspect of crypto, which in a lot of ways can kind of give it a bad name, but it's not just on crypto. I mean, we saw last year with like meme stocks, and I get it. It makes sense. It's exciting. It's a thrill for a lot of people to try to get in low and sell high. But I really like the whole ethos of putting away money a little bit at a time, so that in 10, 20, 30, maybe even 40 years, you have something that's substantial that potentially can change your family tree. So yeah, I just want to echo what you said. This exposure for a lot of people is really great. I know there's a lot of people listening who probably are looking for easier ways to get involved with Bitcoin, and I see it as probably definitely one of the big, like almost like a Gutenberg moment that we haven't really been able to harness quite yet. It's still kind of early on. I mean, we're seeing so many different, I want to call industries being disrupted with blockchain technology that I think in a few years, maybe decades, historians will look back and see this as kind of like, I don't know, we used to call it the Wild West days, but it seems like it's getting more and more structured, more regulated.
Yeah, you made me think of something when you were going through that comment around the Wild West or so forth. Gambling in financial assets, as much as there's very much overexcitement, or you could argue a pandemic of ways in that mindset today, particularly in the U.S., but certainly globally. But I remember during the global financial crisis, people, it was like, okay, how can you become a student of history? And I read this book called The Extraordinary Popular Delusions and the Madness of Crowds. And it was a book that was originally dated back to the 1800s and really was about just the meme stock mindset, but going back to the days of the tulip mania and lots of other sort of FOMO moments for investors that certainly predated social media. And but we've seen it in tech stocks in the late 90s. We saw it in housing in the 06, 07 timeframe or so forth. The important thing is I think in this moment of time is to separate two different things that need to be talked about independently, which is one, the price action being something that people are chasing up and down over the short term, and that momentum is normally fleeting at some point. But then there's the underlying asset and the underlying infrastructure that gets built, and how the technology or asset really transforms, which I think you were leading into, industries and so forth. The tech bubble in the late 90s blew up, but certainly internet, mobility, and so forth, anything but that. And then look at all the wonderful companies and assets that grew off of certainly the internet and the mobile phone space. The same thing is true. If you look at housing, I mean, we have obviously had a housing crash in 08, 09, but home prices are well above those levels nationally and so forth. And we've normalized against what was an extreme, and then, obviously found a foundational footing and grew from there. And I think the same thing is going to be true here. Blockchain as an infrastructure, or even certain tokens as assets, probably have a very long opportunity of runway with value creations that we can't fathom yet. And we can talk about that more. But the mindset of chasing short-term trading in volatile assets is not something that we've proposed to people, and which is why the experience through Acorns is one around investing consistently every month, and having risk-adjusted or appropriate risk for volatile assets, and making it a piece of your portfolio, and to how to think about that over the long term. So, I just wanted to kind of lay that out there, because I thought it was, the right way to, jump off of where you were leading to.
Yeah, thank you. That was really well said. I was a little nervous doing this episode at first. I wasn't sure how it would be received, since it's not completely Bitcoin centric or focusing on blockchain, but there's significant crossover, I think, for those who, I think I said this already, but might be a little cautious to get involved with Bitcoin. This is a really good way to diversify, and I think that's important even for people. There's definitely those listening who are all in on one particular token or digital asset, but I think it's still smart to not put everything in one basket. So it's really a great feature of Acorns. You can pick and choose where your money goes. It's very easy. I mean, even like using the roundups on the card. I don't think we really talked about that, but just everyday purchases, you can have that already set up and just automatically go to different parts. It's so cool. Yeah, you did mention some other future implications of the technology behind Bitcoin. Just kind of curious if there's anything that comes to mind for you, or if there's anything you'd like to talk about that you think that might change.
Oh my God, we probably do multiple podcast conversations around that. I did had a conversation internally in terms of, April was Financial Literacy Month, and we had a conversation around where does blockchain go over time, and how to think about the crypto ecosystem more broadly. And so the point I was making in my mindset is, that infrastructure comes before services. And so the history of tech, if you're a student of evolutions, is to look at the world and say, PCs in the 80s came well before we got into like client server architectures and the idea of having hosted software and the PC becoming a terminal. If you look at the internet in the late 90s and the debate around cable modems and DSL infrastructure and what speeds you needed, and at the same time people were like, well, I don't even know what I'm doing with the internet, so why do I need broadband? And you had this AOL dial-up thing. I can remember when hard disk drives became 100 meg plus, 100 gig plus, and people were like, I don't know if I need that much storage. And obviously that seems quite funny in retrospect. The same thing with mobile phones, right? I mean, like Apple put a camera on the phone, and I think a fair number of people thought like, I don't know if I need to be taking pictures everywhere I go. And then you have, sort of companies like Snap and so forth that come about. And so, I think in a lot of ways, that's what we're seeing here. I mean, we do live in a very much like now is a a now is world, right? So we're watching it in real time, which is a lot different than past technology transitions or opportunities. So, the patience is probably different than where it was in the past. But the reality is you can look at things across the real estate landscape. You can look at things relative to fractional ownership. You can look at distribution of rights ownerships or so forth. There's lots of different ways to apply the logic of where we think services can be oriented that run on top of distributed architectures like blockchains, and that gets people very excited. And I would imagine that those services and companies and economic opportunities are all in front of us. And so, whether it's us at Acorns or others, there's lots of people who are focused on what they're going to build using blockchain. I mean, look at what we just saw around the world in terms of money transfer for donations, helping out countries and so forth who are in need, and the ease and simplicity that people were able to donate that most likely would not have happened in any way, shape, or form before you had a fairly distributed blockchain. So, it's not for me to opine on like what the world will look like over 5 or 10 years in those services, but I know that if you look at history, infrastructure gets built and services come after. And then the assets around some of those tokens will obviously be reflective of which blockchains win and so forth. So it's exciting to say the least. Our job, as you mentioned, is how do we let our customers have a diversified approach to having exposure to that, and for them to be able to look at the world from the lens of where it's going and what investments make sense. I would imagine blockchains eventually open up alternative assets more broadly for people too. So this is just one piece of probably a long road that we're going to head down. But those are probably the quick ways that I would look at it.
Yeah, that's very good. Thanks. So wanted to get your perspective on it. It's interesting. We used to really kind of, make our mission was to try to promote blockchain tech and widespread adoption. We kind of slowed down on that and just kind of focus more on education. I used to spend a lot of time trying to explain the technology on the podcast, but then I realized I think there's such a small group of people listening actually care or want to know how the technology is working. I think about how many people actually want to know how Bluetooth works on their phone or just how their computer, most people don't really care. They just want to know, like, does it have functionality? Is this something that's going to help my life? But I think we're getting to that place in time where it's more and more functional for people. This has more utility. But I wanted to ask your take on consumer adoption, specifically towards this technology. But I mean, if you want to tie it into Acorns, please feel free.
I think what you just said resonates with me, quite deeply, right? I remember when I was an equity analyst like 20 years ago, and all of these software companies were becoming, people won't remember all these names, but like PeopleSoft and Siebel, and there was a bunch of different software companies, and there were all these debates of like, is they're developing in this programming language versus that programming language, and you could proverbially like geek out on like one angle of development processes versus another. The reality is like the companies that ended up winning were the ones that made it really easy for the user to have a service or have a workflow that worked for them, and they weren't hyper focused on the underlying tech. I think the same is true for the broader consumer space, which is, when technologies start up and they become new, we could have these debates around like what was better technology, like DSL or cable modem or VHS or Betamax. The reality is the customers wanted things that were easy to use, cost effective, that they had a good experience with, and so forth. And so I think the same will be true here. It started out, everyone sort of got deep and into the weeds. The reality is as services get enabled that people are comfortable with, that they find friction to be fairly low, that they're getting the value that they want out of it, those will be the places where the average customer or the average user gravitates towards, and that's where leaders will start to emerge. For us, just to boil it back to from the investment side of the house, that's exactly why you used the word diversification before, which is, people could have very religious opinions around what is technologically a better architecture versus something else. I'm sure that there's people here who could argue very strongly around Android versus iOS in terms of technical merits, or back in the day, Microsoft versus Mac or with Mac OS. But there's reasons that market share has become bigger, and technological underpinnings is an important piece of it. But the user experience is usually more dominant. So from our vantage point, it'll be a function of diversifying your way into opportunities that make sense. But I definitely think finding the balance between giving people a headache on the tech and also focusing on user experience is probably the better way to look at it.
Yeah, definitely. Kind of wanted to get your take on maybe some underlying factors influencing crypto market recently. I know that it's up and down for a lot of people who aren't following it. Maybe they'll check in every once in a while, but for most people, they're checking religiously. How is it doing today, kind of thing. And I kind of have a long-term mindset with it, where it's like set it and forget it and let it do its thing. Is there anything you can comment on maybe some factors that people aren't aware of that might be changing in that crypto market?
Yeah, and I'm glad you asked that. And I certainly appreciate spending the time to talk through it for people. Education, and you alluded to this earlier, is a really, really important piece of how to think about owning what you understand, but also understanding the risks when you own something. And so, we try really hard to make education an ongoing process that people, come to us for, in the point of investing to understand why they own 1%, 2%, 3%, or some nominal amount of having Bitcoin exposure, or just in general, how to think about what the asset class represents is top of mind for us in terms of our communication. The reality is the world, or at least the US, let's talk there specifically, went through a very easy money supply for a few years, which means the Fed had rates and availability of capital at very low levels to support the economy as we were coming through the pandemic. And we are now getting to an economic backdrop, or we are in an economic backdrop, where that easy capital needs to be unwound. And that's not an easy process for risk assets to adjust to, and so they're volatile in getting comfortable with a changing backdrop. We also were in a world where people were home and trading voraciously, and probably spending more time on that sort of FOMO trading mindset than what is sustainable long term. And so you put the combination of our lives getting back to quote unquote normal, and the capital markets and the availability of money and the cost of money coming back to more levels of normal. And you're going to see the ebbs and flows around asset prices. Certainly, we're focused in this conversation, and lots of the media is focused on what we've seen in crypto in the last, let's say, year-to-date period. Bonds have had one of their worst starts to the year, or the worst start of the year in like 100 years. So, and people perceive bonds as being stable, and they've been anything but that, right? So there's been a lot of places where money has come out of the financial markets, and crypto is one piece of that. The other thing to remember is, like, a normal stock market correction is 10 to 20%. And a bear market is north of 20%. But there have been periods of time in the past where you've had very risky or volatile assets go down a lot more than that and still be fine. Meaning like the NASDAQ back in 2000, I think, went down, give or take, like 70% or something close to that. And so, it's not abnormal to see these very large swings as assets and asset classes are either more nascent or going through the adjustment cycle, like we just mentioned, related to rates and user adoption. And crypto is going through that too, right? This is part of the maturation process. To not expect that would be, I think, short-sighted in recognizing the ups and downs. To want to take advantage of that, I think, is really important, and to make sure that as you mentioned earlier, investing for the long term doesn't have to be, buy a little bit today and then wake up in 10 years and hope that it's higher. It can be a more active thing of buy a little bit today, buy a little bit tomorrow, buy a little bit the next day, keeping it small in its proportion, but making sure that each day, each week, each month, a little bit of averaging in goes a long way to making sure you have the right cost basis so you can generate really great returns for the long term. And I think that that's what we're seeing in the crypto market. Some portion of it will be, in my humble opinion, be an opportunity. So whether that be Bitcoin or others, and some portion of them will be highly speculative and may not make it to the other side. It's no different than what we saw with certain pockets of the housing market or certain pockets with the tech market from 20 years ago. And that's also normal too, right? That cleansing process is very helpful to the survivors. It creates wider moats. It creates more sticky capital over the long term in terms of how investors think. And so this is a conditional period that I think will set ourselves up for a great opportunity over the long term. So it's a moment in time for where we're at.
Yeah, very well said. Really appreciate you coming on, Seth, and taking the time to explain this and giving us a really good overall perspective. I think sometimes that's needed. You got a really good grasp on the wider space. I think a lot of this is interconnected. It's all related. So I just want to thank you again for coming on. If you'd like to leave us with anything, any final thoughts, definitely maybe tell people how they can get involved. That'd be great.
Yeah, no, I appreciate it, Ethan. I enjoyed this. For us, our customers, you mentioned before, you use our app through your phone and so forth. That's how the vast majority of people use Acorns interface with it. Our goal at the end of the day is to help people invest for the long term, keep them diversified, make sure they're educated on what they're involved in, and to realize that in every market environment, it's all about having a plan. And if you're disciplined to that plan and you can be thoughtful in terms of how to take advantage of opportunities, that goes a long way to creating really great returns for people over the long term. And I think in this moment in time, we're in a choppy market. Maybe it's a downtrending market, but that goes back to the old mindset of you want to be either greedy or investing when other people are fearful. Warren Buffett has certainly taught us that, and other great investors over the long term. And there's no better time to average your way into markets than when they're choppy and giving you opportunities. So. That's where we're at. I love being given an opportunity, and I really enjoy working with our customers and so forth, and appreciate the opportunity you've given me to be able to tell our story. So thanks a lot.
And thank you very much for listening to this episode of The Blockchain Show. If you liked what you heard today and you want to try Acorns out, use my exclusive link in the show notes, and you will get $5 deposited into your account after setting up. I've been using Acorns for years, like I said in the podcast. I think it's a pretty cool service, but if that's not your thing and you want to, buy your crypto directly and own it, then be sure to use our Coinbase link, and then I think you can still get $10 of free Bitcoin after signing up there. But either way, both methods will help support the show. I'd greatly appreciate it. Please consider subscribing to us on YouTube. We're going to have some video content coming out pretty soon that I've been working on. Maybe you have some suggestions, send me an email, info@theblockchainshow.com, or if you have any interesting guests who you think could make for a good episode. I appreciate you all. Thank you very much. We'll see you next week.